The Fed cut has crushed the dollar to 99, a merciless mauling that's unmasking silver as the most undervalued asset ever, with a $73 target glinting like a guillotine blade in the gloom. The 10th of December 2025 today, as the echoes of Jerome Powell's podium still reverberate through the trading halls like a death knell for fiat's fragile facade. The Federal Reserve executed its third rate reduction of the year this morning, a parsimonious 0. 25% pairing that nudged the federal funds rate into the precarious 3.5 to 3.75% precinct, a prescription the probability pundits had pegged at 87% precision. But Powell's postscript from the Federal Reserve's fortress? It festered with the fetid frost of hawkish heresy core PCE inflation ensnared at 8%. The descent to our target is neither assured nor automatic, he articulated with Arctic acuity, architecting a 2026 blueprint of a begrudging 2 more quarter-point concessions, bereft of the bountiful balm of broader easing the bond brigade had banked on. The dollar index, in cataclysmic counterpoint, didn't decline, it disintegrated, plummeting to 99. 2 inches of 5-week sinkhole that savaged 7% year-to-date. Its most malingering milestone since the tariff tempests of summer scorched the sentiment into cinders. Silver, in this sepulchral storm, didn't demur it detonated to $61 an ounce, a ferocious 102% year-to-date conflagration that incinerates every icon from the Hunt brothers' 1,980 Inferno. Gold gallops in grim tandem at $4,216, a steadfast 55% surge, but silver's schizoid splendor as primordial pelf and pivotal powerhouse of progress positions it as the pantheon's pariah, the most undervalued asset ever in an epoch of egregious excess. Yet, what wedged like a wedge of woe in my windpipe this forenoon, as I foraged through freshly forged forecast folios from the forecasting front lines with the Forex feeds frenzied in frenzy, was the unyielding upgrade to $73 by December's dusk analyst amalgam from Long Forecast's Laser and Ventura's Vanguard, averaging $72.50 for the month's meridian, impelled by industrial immolation and monetary meltdown. Why this prophetic $73 pinnacle now, as the Fed's feigned felicity flattens the dollar to 99.2's floor? My theory, tempered in the torrid forge of twilight trawls through custody crypts and council communiques, is that silver's undervaluation isn't anomaly, it's apocalypse averted, stage 3 of a 4-stage Armageddon that's atomized assets from Rome's radiate debasements to Russia's rhenium rifts. The Fed's ostensibly anodyne incision has incised the dollar's dike, deluging the destitute toward durables in desperate durance. But those hawkish harmonics? They're the hidden harpoon hurling us toward stage 4, where silver's sprint to $73 by Christmas isn't a saunter, it's a seismic sledgehammer. Premiums prefiguring the purge, as BRICS Bastion's blueprint silver clauses, to bisect dollar dominion by 30% trade tilt. Industrial infernos from photovoltaic phalanxes to voltaic vanguards vampirize vaults at 149 million-ounce deficits yearly. Central cathedrals consecrate 1,200 tons of gold in grim gospel, up 20%, yet silver's Janus faced jeopardy. Monarch of money and minion of machines martyrs it as the messiah of this monetary maelstrom. At $61, silver isn't inflated, it's insultingly inexpensive, is the most undervalued asset ever, amid 350 trillion in global gravitas and fiat's 54-year phantasmagoria, post-Nixon's 1,971 notch. The portal to pilfer physical before the $73 target tidies the timid and the hawkish headwind hardens into hurricane. It's splintering under undervaluation's urgent undertow and buckling beneath the dollar's deliquescence, but you still shoulder the sledgehammer if you swing it before stage 4's surge scorches the stragglers into sterling submission. Before we wade into this wave-whipped warning and the dollar's doomsday dive, let me buttress the bulwark with brutal, unblinking candor. I'm not a financial advisor, and nothing wading from this watery wake constitutes counsel in coin or creed. This is unsparing educational endoscopy from public pantheons, the exhaustive COMEX custody canticles, Silver Institute's shortfall sermons, IEA industrial imprecations, Bloomberg's hawkish headlines. I've waded through these watery wilds like a whaler in a white squall, bolting the breakers into bastion, and the bulwark barring our bay is no bogeyman, it's the self-same, surge-seasoned sentinel that systematically stripped the speculators and sovereignly sanctified the seers across silver's sanguinary scripture. To truly trace why the Fed cuts crush on the dollar to 99 unleashes silver as the most undervalued asset ever, with a $73 target tantalizing like a taunt from the Titans, catalyzing a global gale that guts fiat's facade in undervaluation's unforgiving forge. We must meticulously map the four-stage monad that's methodically mangled markets, from the aureate adulterations of Augustus to the OPEC oil odysseys of October 73, a formidable firmament where complacency cements the catacomb of the credulous, expansion etches the escarpment of excess, recognition rends the rampart of reality, and eruption engulfs the edifice in eschatological ecstasy. This archetype isn't airy alchemy alchemized from arcane ether. It's alighted from the anvil of antiquity's anvils, from the blight-blasted barrenness of Ireland's 1,845 potato purgatory to the Russian-rigged rigidity of Palladium's 2019 to 2020 plague, and now it hammers silver's hallowed hammer with the USD's 99.2 nadir as the necrotic nexus. Stage 1 is complacency, the cloistered complot where copiousness cultivates the canker's covert cradle. Envision the post-hunt holocaust of 1980. Silver staggered to sub-$10 derision in the doldrums. Regulators rearing a rampart of reprisal that reared futures fortifications 50 times the physical palisades. Open interest overindulging to 244% of COMEX's custodial crypt. Complacency commandeered the collective consciousness. Prices picketed perpetually under $30 for a languid decade of lassitude. Central cathedrals cascading reserves like confetti at a coronation of credulity. Industrial ingestion idling indolently at 40%, while mines marshaled 100 million-ounce surpluses with scornful superfluity. Debt, dormant dawdling at 50% of global GDP's girth. Fiat, freshly forged from 1971's Nixon notch, unbuckled but unbowed, unquestioned as the unassailable umpire of unlimited utility. The system slumbered in smug serenity, hoard the holographs of hollow promise, hail the handlers of the hallucination, disregard the dirge of depleted depths. Complacency compacted silver's sovereign sparkle into a coiled catastrophe, a camouflaged catapult cloaked in the calm of collective credulity, cocking the crossbow of crisis with cruel cunning, priming the powder keg for the $73 target's private pyre. Stage 2 is expansion, the encroaching entropy where escarpments erode inexorably, but empires endure an egregious error. The 2008 edifice's entropic eclipse epitomized this epochal excess. Layman liquefied in liquidity's lethal lapse, a 30 trillion QE quarried from global granaries, Fed's folio fattening eightfold. Edicts erected empires of ephemeral edifice derivatives delving into quadrillion depths of delusion, silver shorts storming to stalemate spikes, prices probing then prodded low despite deficits denting. Industrial insurgency insinuated itself insidiously. Solar slurping paste doubling to 85 million ounces by 2020, EVs engorging 3 times gas guzzlers, 5G spires and AI arsenals aching for Alloy's arc. Silver Institute scores 59% industrial by 2024, from 40%. Mines maxed 2015 at 886 million, sagging 7% since byproduct blues bedeviled zinc and copper. Deficits, 149 million, 2024, fifth year, shored by scrap but expansion entombed it, paper peddling 100 to 1 tangible, JP Morgan jockeying from shorts to secret stashes, USD, unruffled pre-99 plunge but expansion excavated entrenchment, M2 mushrooming 40% post-plague, inflation incognito via CPI chicanery, silver stewing slighted as fiat festered. Stage 3 is the break, the breach where semblances splinter and the $73 target taunts. This is our now. Nucleated by today's Fed trim and USD's 99.2 nadir awakening to digging's dawdle. Central hordes hammering 1,200 tons 2025, up 20%. The $73 clarion. COMEX registered, /25% YTD to under 10 million ounces. Eligible 500 million but strained surfacing as lease rates nudge 2%. Backwardation brushing with spot premiums nipping futures 10 cents. ETF inflows. GLD. 300 tons quarterly, 2020 echoes, physical premiums, 2 to 3 over spot, Kitco Qs lengthening. Geopolitics goads, Taiwan tempests hike 20% haven bids, Mideast flares reroute oil 10%, BRICS blueprints silver clauses 20% reserves, fleeing dollars by 2027, IMF murmurs. The Fed snare? Cut buckles USD 7% YTD to 99.2, beckoning bullion bids, but hawkish persistent PCE halts easing, yields rebounding 0.5 point to 3, 8%. Volatility vitriol scouring specs before sprint. Analyst amalgam, $72.50 average December, $73 peak on industrial immolation and monetary meltdown. Undervaluation indicts. Silver's cap trails gold's, yet anchors no hype 886 million tons above ground. Output capped as grades gutter 30% decade, the $73 target. The traps tell, cuts lure, but inflation rebound mandates pause, supercharging silver as fiscal foil. Stage 3, throttles shorts, $61, the breakouts bellow, $73, the undervalued's unleashing, or window warps as premiums prelude. Stage 4 is eruption, the tsunami's towering torrent where quotes quake to $73, USD's 99.2 wreckage the wave's wrath. Sovereign salvo, China unveils 500-ton quarterly. BRICS codifies clauses, COMEX claims surge 50% as ETFs swap synthetics for sovereigns. Yields yo-yo and Fed trap, cut negatives lure 20%, EM exodus, inflation 3. 2% core, compels curtail, dollar to 95. Silver's cost collapses minus 1% real. Analyst math. $73 December, 100 Q2 2026. Mine shortfall, buffers blasted in months. Gaps gape. 61 to 73 December on cut tailwind, tsunamis roar as trap bites, inflation spirals 4%, emergency easing, dollar hegemony phrase. COMEX curbs weekly, defaults 20%, suits swarm, short squeezed 100 billion unwind. Premiums puff 20 to 40%, 73 spot yields 95 eagles, mints moribund years, traps tango. Hawkish cut lulls, debt service 2 trillion 2027 prints, inflation 4%, cuts cascade, hegemony hemorrhages BRICS 30% silver trade by 2028. Counter skeptics, yields rise, silver lags, trap twists post-pause print plunges them. 1,980s 49 proof, CB's dump, reversal rigid, buys since 2010, 1,200 tons, 2025, shatter, no retreat bar, deflation delusion. Industrial subs, silver's 5% jewelry, investment core, tech purity peerless, recycling 20% ceiling, mines multiply, 7 to 10 years infancy, capex crippled post 2015, output stagnant despite $50 leap. Demand dips, geopolitics guards, fiscal fissures forge, IRA subsidies, silver line and green. This epoch's earthquake, 1,971 fiat genesis meets 2008 QE eternity, but 2025 debt Armageddon, 350 trillion, 10% GDP servicing snares, Fed checkmate, cuts, Kindle inflation Kindle cuts, silver recalibrates as fiat's phantom bane. $73, no apex, 1,002,02, 6 whispers, base if BRICS bolts. Undervaluation at 61, 40% shy inflation fair, 100 historical, 70% below multi-year maps. Eruption vaults at 73 December, Cascade 100 mid 2026 as trap tires fiat's thread. Not query Quicksilver of Quandary. As the $73 target tsunami tidies the timid amid USD's 99.2 nadir and Fed traps tangle, the breakout beckons not blind bets, but barricaded bets, possession over punt, resilience over recoil. First, vow to verifiable vault. Spurn ETF ephemera with cash traps and futures fiascos that felled 1,980 flotters. Hail minted monarchs, American silver eagles, maple leafs, kilo purity proclaimed for frictionless frontier flips. Premiums 1 to 2% over spot your bulwark when they burgeon. Harvest from hallmarked, like Apex. Serial scanned sands, spurious surges. Second, harvest hastily physical 10 to 20 over spot present, but breaks bellow balloons to 100. 200 as COMEX creaks. Fed cut courts but trap teases tapers. Stagger scoops sub 60. 10% parcels pairing the pattern's pulse. Third, portion prudently. 10 to 15% portfolio for ballast. Silver's 1-0 to 1 trap triumphs historical, up to 20 if debt alarms toll louder, blended with gold spark or treasuries yield net against rogue waves. This hedges the math without betting the farm. Fourth, secure custody unyieldingly. Home safes for tranches under 100 ounces fireproof, bolted, insured, or allocated private vaults like Delaware Depository for scale, keys in your hand, no counterparty creeping in via bank boxes or custodian fine print. Audit annually. Diversify locations against seizure risks and trap escalations. Fifth, empower with vigilance. Track COMEX eligible weekly. Silver Institute updates quarterly. Fed dot plots monthly. Tools like Kitco alerts or Bloomberg terminals arm you against noise, verifying the pattern's pulse to time without chasing shadows. The Fed trap's genius is its duality: cuts, beckon, buys, hawkish rebukes, test, resolve, but silver's undervaluation endures. $73 the beacon through fog. Choice crystallizes. Embrace physical now, thrive in eruption's gale, or spectate the transfer, regretting inaction as 73 spot mocks yesterday's hesitation. Every cycle favors the forewarned. This one's no exception. If silver's whisper at 61 resonates as roar in your gut, subscribe. I'll dissect the breakout beats in real time, from COMEX cracks to BRICS maneuvers. Comment below, $73 by Christmas, or does the trap delay it? Your insights sharpen the edge. And tune in next. The veiled hands suppressing silver for decades, fines paid, short stacked, the playbook exposed. The trap sprung, position or perish.